heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York. This is Bloomberg Technology. Coming up, Nvidia, it surges as AI demand powers the company's outlook yet again. We'll have full coverage on the company as it looks to add $250 billion to its market cap just today. And we'll get a read on the state of the IPO market as Reddit gears up to file publicly for its offering as soon as today. Details to come. Plus, from chips and IPOs to the moon, we get a preview on what we can expect from exploration startup Intuitive Machines and its attempt to put a US-made lander on the moon for the first time in 50 years. But first, we've got to get to it. Extraordinary moves once again, extraordinary moves in market capitalization, and yet still a valuation that is relatively cheap. Nvidia surging 15%. It would be the biggest ever addition in terms of market cap on record that we've seen for any single stock. Up 15%, once again, making it on edge to get to that $2 trillion mark when it comes to market capitalization. And the reason that maybe the valuation is still at 33 times forward-looking earnings is because, well, those earnings keep on rising at an extraordinary pace. Here's what guests had to say.
What a sensational set of results from Nvidia.
This is really the earnings heard around the world.
I'll do my best to sort of contain my enthusiasm.
It seems each quarter they continue to surprise.
There are going to be significant benefits.
The only result that was going to be acceptable was not only a beat, but a substantial beat.
This is a company that continues to execute and completely blow away everybody's most robust forecast.
You can't deny the impact that it's having across not just in the US market and the US tech sector, but actually globally. And I think one of those reasons is that people are really buying into this idea that it isn't a tipping point.
There is great momentum there.
People are beginning to wonder how many consecutive quarters can this company continue to run with.
The big question has been, how long can this continue?
There is sort of a consensus in the industry to put some competitive pressure back on Nvidia.
The competition has never been more fierce than it is right now for Nvidia, but they have a huge head start.
This tidal wave of spend, it's coming to the rest of tech. And in our opinion, that's going to continue to fuel this tech bull market.
The equity market sort of really nicely sort of set up from here.
This AI party, it's just getting started.
Bloomberg Intelligence Senior Analyst Mandeep Singh joins us to take us on a gear from it just getting started. What was extraordinary is if you were trading after hours, and not everyone does, at one point you were looking at a loss. What pushed us significantly back into the green?
Yeah, so when you look at the print, the China number stood out. So China used to be 20% of revenue. Now it was single digits. So clearly they've had some headwinds. But despite that, they come out and raise the forecast by another 10%. And, that's what's most impressive about the results is not only have they executed well, they have not missed a beat in terms of shipping new product. So they're talking about H200 chips in 2Q. That's double the performance of H100. And we know H100 was double the performance of A100. So clearly, they're executing to perfection here, and they keep delivering quarter after quarter of perfection. I mean, the question to me is really, what is the addressable market? Which Jensen said, it's $1 trillion incremental over the next 5 years, and they are very well positioned on the compute and networking side. So if you take that, forecast and model that, you will believe they can keep, continue with these numbers. But at some point, there will be a digestion phase because they are exposed to hyperscalers.
Yes.
The CapEx is 50% of their data center revenue is coming from hyperscaler CapEx. So that's 10 companies, which means every hyperscaler is about 5% of NVIDIA's revenue. And they are buying these chips, but for how long? And if one of them does get their own chip, what impact does it have on NVIDIA's growth? Probably people are not going to talk about it for the next 1 or 2 quarters. This is more of, a 4 or 5 quarter question.
But Jensen himself has started to talk about diversification, talking that sovereigns need to have access to their own compute, that companies need to do that. That's why they had this deal with Cisco. How much do you think that they can diversify away from these mega companies that are so dominating their revenue?
I mean, they need that. And Jensen said there will be more than 5 foundational models. So right now, the prevailing market view is there will be 4 or 5 foundational large language models, and every company will standardize on that. What he's saying is there will be vertical specific large language models, sovereign large language models, because these companies don't want to give away their data to OpenAI or Gemini. And so if that's the case, then yes, these companies need to invest, or governments need to have the same level of CapEx investments what hyperscalers have done over the last 2-3 years in terms of buying these Nvidia chips. But if the standardized models are going to be the 4 or 5 models that we know, then I think it will be hard to justify companies spending $40-50 billion in CapEx to buy Nvidia chips for training. And Jensen called out inferencing, which is the other big opportunity. So if Nvidia chips are going to be in smartphones, in PCs, in inferencing, other types of inferencing, then yes, that expands their market. But we don't know those details. All we know is next quarter, they're going to come out and probably raise by another 10% because they probably sandbagged, in terms of the visibility they already have.
And we're expecting next quarter another revenue increase of more than 200%. Just always brilliant to push it forward with Bloomberg Intelligence senior analyst Mandeep Singh. We always thank him. And actually, we were just referencing maybe some of the flies in the ointment, which was China. Let's dive deep into that, because the China story is important. And Jungheng Lee is joining us now. She's indeed the CEO, founder, and head of research at JL Warren Capital. And what's so interesting about JL Warren Capital is you're basically focusing a limelight on the companies that do have a big exposure to China and really doing deep dive research into them. How much exposure is Nvidia going to have going forward?
Well, I think it's very dynamic. Right now, they have 5%, as the CEO said on a conference call yesterday. In fiscal year 2023 was 20%. So there's a sharp drop in the direct exposure to the China market. However, there are offshore data centers owned by Chinese or Chinese entities that use Nvidia chips. So those would be the markets in Singapore, markets of Middle East. So if you combine all those, I would say that's probably add up to 15-20% of the Nvidia AI chip exposure. So depending on Biden administration's approval, but China is expecting the shipment of H20, which is a dumbed down version of the H100 AI chip shipment in second quarter. But then again, it really depends on the administration in the U.S.
Yeah.
There's absolutely a shortage of equivalent of the AI GPU chips in China, even though there are attempts to catch up. But it's such a long and a complex supply chain. It's not something, it's not writing a code. It's not software, which China is very good at.
So how quickly, therefore, do you think, Jungheng, that much has been said that if we do indeed force US companies to exit their exposure to China, ultimately we're just fast-tracking the supply chain, the internal supply chain of China. Do you believe that? Or ultimately does Jensen, as he seems to still say, want to still be winning in China? He still seems to think that there is a place for his company in China.
Well, I mean, there's short term, there's long term. Short term, there's no equivalent of similar technology, architecture, and production capacity, which is really important. As we've seen, this is a company in operation for 30 years. It went through a very rich history of ups and downs. And the A100, which is the first dominating AI GPU parallel computing chip that was launched 2 years ago, it takes a couple of years to figure out the Cobalt's production capacity. And even today, demand far exceeds the supply, right? So, I mean, it is a very complex, it's a hardware company predominantly as of today. And the supply chain is very long, and it's primarily in Taiwan and across Asia. So it's going to take a very, very long time for Huawei to figure out where to source its CapEx equipment, where to, source the packaging and testing, qualification, etc. So, I mean, I would think 5 to 10 years. And so till then, there's enough room for Nvidia to ship its legacy chips to China, just get it going, and for companies to figure out how to run their kind of lower version of AI computing.
Jung-Heng, I'm interested in your perspective on the total addressable market here, because AMD had put out this $400 billion figure, and then Jensen just saw that and raised the bar significantly, saying it's $1 trillion. Where do you stand on TAM when it comes to these sorts of chips?
Well, I think it's so early on the adoption, it's kind of like irrelevant question. So annually, globally, there are about like 13, 14 server shipment. And currently, AI attach rate is about 4%, right? So, I mean, really depending on what you think, the AI attach rate should be in a normalized circumstance. But right now, I mean, no one knows. I mean, even assuming what Lisa sued for, her number is 400 billion. And let's assume Nvidia takes 60 or 70% of that AI chip market, and times it's normalized, let's say normalize the net operating margin of 40% versus today 50%, because they have such a bargaining power to its customers because of the shortage of supply and product mix, and that gives you 300 billion run rate of net profit annually, and times whichever multiple you want to put it. You can argue it's hardware, and it's growing so fast. It's on way becoming the industry gold standard. So you put 25 times PE on a normalized demand cycle. So that gives you about like a 3 trillion market cap.
Wow.
So versus today, I guess it's 1.72 trillion. So we are looking at pretty close to doubling, in the next few years. It could be bigger than that because Lisa Su's number can be too low. Jensen Huang's number could be closer to reality, but just no one knows. It really depends on the end market application development. But one thing I want to say is, look at this quarter's gross margin, 77%. That's really, really rare. The only company that I can think of a gross margin closer to that is Hermes, which tells me that this is a story that demand far exceeds supply, and the company has so much bargaining power to its suppliers, and there's tremendous operating and economy of scale.
Putting it very succinctly at the end there. Still much to be made of this particular stock move, and many still feeling they want to get in. JL Warren Capital CEO and founder Jung-Heng Lee, it's been brilliant to get your expertise today. Thank you very much indeed. Meanwhile, let's check in on the broader markets, because there is real impact here. Seema Shah said it. This is a global repercussion story. Look, we've seen the Nasdaq up 2.3%, but the Japanese index, the Nikkei, surged to a new record high. Why? Because the likes of SoftBank, of course, AI-related companies, did a lot of the high bar making today on the back of these numbers coming from Nvidia. Stocks 600 over in Europe, a new record high there as well. Again, this is a tech play. This is euphoria around the productivity gains that we can get out of AI. So we're up 0.9% and a new record. Moving on, have a little look at what's happening in some other risk assets, a choice for this particular show. Crypto, look, it's one risk asset that's perhaps not surging in quite the same lockstep as the Nasdaq, but we are still up some 0.6% on the day. We're around that almost $52,000 level. Meanwhile, coming up, Reddit, it gears up to file for its initial public offering very, very soon. Details to come. And watching shares of, AT&T, T-Mobile, Verizon. Look, I'm sorry, if you're out there today with an AT&T contract, you've had some problems getting around using your service. There have been ever since 3 a.m. some issues with down detectors showing that ultimately the network has been forced offline. We're off by 2.9% on AT&T, T-Mobile, and indeed Verizon. Even though they said their overall networks were working well, they too were affected by AT&T's issues. We keep an eye on those stocks. This is Bloomberg Technology. Time now for Talking Tech, and first up, Google actually pausing its AI-made images of people. That's in their Gemini after criticism about how it was handling race. Earlier this week, Google said it was aware that Gemini was offering what it called inaccuracies in some historical image generation depictions. The company now says it's working to address the issues with its image generative feature. Plus, venture firm Andreessen Horowitz has just invested $100 million in a crypto startup called Eigenlayer. Now, the announcement suggests that some of the industry's top backers, they're still betting on blockchain despite what has been a steep downturn in crypto venture funding. However, the VC firm was the sole investor in Eigenlayer's funding round. And social media platform Reddit, well, it has struck a deal with Google, we understand. Now, according to Reuters, the deal will make Reddit's content available for training the search engine giant's artificial intelligence models. So basically raking in some much needed revenue each year by giving access to its data. And let's just talk about Reddit more broadly, because this comes ahead of an expected filing of its S1 within coming days for its hotly anticipated IPO. We're going to bring in Katie Roof now for more. And it is notable that we're sort of starting to hear about these deals, these sort of revenue-generating deals when it comes to access to Reddit's own data for training AI ahead of what could be an IPO filing.
Right. Obviously they're hoping to get some buzz. AI is a hot category right now. And so Reddit, which has wanted to IPO for 3 years now, is hoping that this AI partnership is going to excite Wall Street.
Yeah, and it's just one name. And of course, there are a fair few companies wanting data to train their AI models on. So we could see yet more of it flow in and yet more money to be agreed to if we do indeed think it's going to be about 60 million in revenue per year. I'm interested in ultimately what means and why Reddit would be looking to finally go public now. What is it that they're seeing, that they're reading, that means that this is the time to tap the market?
So what happened was Reddit announced in late 2021 that they had filed for IPO, but that was right when the IPO window closed for tech IPOs. And so other than, Instacart and Klaviyo and ARM last September, those are the only tech IPOs we've had in over 2 years. And so Reddit didn't restart the IPO window. Instacart tried to, but now Reddit's going to try to reopen the window in part two of attempting to excite the market about tech IPOs again.
And I'm sure.
So it's been a long time coming.
Exciting some potential VCs and early checks in as well to finally get some liquidity event. Katie Roof, we thank you so much for bringing us the expertise. And, well, we wait and we watch on Reddit. Let's just focus in on EVs a little bit more. The Vietnamese electric vehicle maker VinFast is actually, shares have been moving around today on the downside at one point because its earnings report showed that losses increased during the fiscal fourth quarter. But revenue, it did jump, in fact doubling from year-on-year basis. We've got an acceleration of automobile deliveries happening for the company. VinFast chairwoman of the board of directors, Madame Thuy Le, joins us now. And Madame Thuy, I'm interested about that loss widening. What's driving the losses escalating at the moment?
The Q4 versus Q3, actually, that's there was some one-off adjustment of the inventory. Otherwise, the trend has been positive. So the margin after the adjustment is about 27%, minus 27% versus minus 37% in Q3. So we're heading in the right direction. But because the one-off adjustment at the end of the year, you see the gross margin going down.
As we said, though, revenue's on the rise. We've seen 13,513 deliveries in the fiscal fourth quarter of EVs. Your target, I think it is 100,000 EVs for the year, for this fiscal year. How do you get there, Madame Thuy?
Well, we, as you know, we're the only one in the world that has the whole lineup of vehicles from A segment to the E segment. This year we start delivering vehicles for the right-hand drive markets, like Indonesia as well. So we have the full lineup of vehicles in all segments for all different markets. We already in Vietnam, so Vietnam will continue to be to support about half of that forecast and continue to be the biggest market for us in 2024. The rest of it spread over across North America, Europe and Middle East and Asia as well. So we believe that with our lineup of vehicles, our access to all different markets, we should be able to get to achieve the forecast.
And then with that supply, you need to have demand meeting it on the other side. As you say, Vietnam's still your biggest market at the moment. But tell us a little bit about where you look to expand. I know you've been looking into the Philippines from just an exposure, but in Indonesia, as you were just saying. Where is the demand going to be coming from? Because we've just seen it with Rivian, you've seen it with Tesla, that, well, there's a pullback, it feels like, a slowing in growth of demand for electric vehicles because people are worried about infrastructure. They're worried about their ability to charge.
Well, we've seen, we have observed skepticism in adoptions for EVs. However, the reality is there's still adoption of EVs in all markets, right? So the vehicle sales increased by 12% and 17% in the US and in Europe last year. But the EV sales increased by 45%. So there's still increase in EVs. There's still adoption of EVs, and we believe that there's a market for EVs. I mean, the forecast is still 2 million, 2.4 million of EV sales this year in the US. We look at, so we believe that we should be able to get some market share in North America and in Europe, where we are the launch our products. But we think that the volume-driven markets for us in the future would be in the markets closer to us, like in Asia. India, for example, 1.5 billion people, the most populous country in the world, with very low adoption right now. Or Indonesia, the third most populous country in the world, part of ASEAN that we belong to, and also very low adoption right now. We believe that we should be able, in the long run, get more volume from this market as well.
Madam Thuy, staying up late.
Market, Philippines.
Thank you for being with us from Hanoi late in the evening. From Vinvast, we thank you very much indeed. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Let's get you a quick check on these markets halfway through this trading day. And look, it is an AI story. It is an earnings beat from Nvidia that drives the Nasdaq 100 up some 2.5%. Chip makers really roaring. Look, and this isn't just a US story. You're seeing this played out with the Japanese Nikkei hitting a new record high. Stock 600 over in Europe at a new record high. We've just had the close of trade in Europe. We're up 0.9%, 495. But the stocks, as I say, other chip makers really managing to flourish at the moment as Marvell moves higher, AMD as well, on what seems to be an enormous total addressable market as was envisioned by Jensen over at Nvidia. We're up 4.5% on the stocks more broadly. Moving on and have a look at some other individual names. And look, there have been other earnings we've got to get our teeth into, but Nvidia front and center up more than 15%. Synopsys, another AI player, this is also up some 11% after its earnings really showed that it's managing to capitalize on this particular part of the market. Rivian, though, ugly, off by 27% after they slow their production, and indeed they are more worried about having to be laying off people, 10% of the workforce likely to go. We're going to be digging into some other names that have been on the move, Lenovo for example, but let's just have a return to what's happening within Nvidia, because we are up significantly. We're at a new record high. We're at $250 billion worth of market cap increase on the day. We're almost at a $2 trillion market capitalization, and yet despite that market cap, the stock is actually still kind of cheap. PE, future earnings, look, they keep on escalating, and so from a forwards PE basis, we're actually still only at 33. Let's dig into all of that. Kunjan Sabani is with us, Bloomberg Intelligence, for more on ultimately a company that just knocks it out of the park. I mean, have you seen any other companies able to deliver twice now 200% growth on a revenue basis, just escalating when it comes to their overall earnings per share as well?
I have not in my career. And I mean, look, and surprise on Nvidia earnings is no longer a surprise. This is something now we are getting accustomed to expect every time. But more than the magnitude of the beat, it was the quality of the earnings that was reassuring to us. On the supply side, it seems supply keeps coming in strong, but more importantly, they are able to diversify the suppliers. And you saw the benefit of that in lower component cost in their gross margins. But more importantly was the quality of the demand. It seems the demand momentum is continuing, but it was also the broad-based demands, not just from their largest cloud players, but beyond that to the internet, to the hyperscalers, to the enterprises, and to various different vertical markets.
The one area of demand people might be concerned about, of course, has been China, Kunjan. And this still seems to be an area that Jensen's really focused on, still thinking that they can win and that there's a place for them in that market.
Yeah, I mean, we saw significant drop in China, right? Like almost a loss of $2 billion just in the data center, and we don't think this headwind is going away anytime soon. If at all, getting worse with more restrictions. In the near term, it should not impact the trajectory because this demand is running ahead of supply, so they can easily ship this products that they would have liked to ship to China to other countries and the U.S. But in the long term, we think this takes the bite out of the TAM opportunity. opportunity. China being the second largest market, right? If there was no restrictions, they could have even grown much faster for longer.
Extraordinary chart we were just looking at of data center revenue just up and to the right. Bloomberg Intelligence analyst Kunjan Sabani, who had a very late night and a very early start yesterday. We appreciate it a lot. Meanwhile, coming up, Female Founders Fund. It hosted its 2024 CEO Summit over at the New York Stock Exchange. We're going to be hearing from the founding partner and indeed one of her portfolio companies that just raised some money. This is Bloomberg Technology. Talk about the venture community and the women in it. Anu Dugal, Female Founders Fund founding partner, has just been hosting the Year of Women conference at the New York Stock Exchange. Here's what she had to say about the VC environment right now, how it's changing, and what she's seen for women investing in tech sector. Just take a listen.
I think it's a really interesting time in venture investing right now. I think the investable categories have shifted significantly. For us at Female Founders Fund, we remain really excited about digital health. Maven was one of our early investments. We just announced the Series B funding for ULA this week, which is incredibly exciting. Beauty and personal care is another category that we think remains resilient. You've seen some incredible exits and outcomes over the past 12 months. Vertical software solutions, that remains a consistent theme across the last decade. And then lastly, I would say the newer category where we've been actively investing is climate tech.
Let's go in on climate tech, because some might say that gets a whole load of politicization around it, particularly as we enter an election year. How are you seeing real world use cases of the technology that you're starting to back?
Yeah, it's a fairly broad category. I'll give you a couple of examples. So we invested in a company last year called Watts, which is a waste management software solution, helping large hospitality players do a better job of managing the expense around their waste. We've also invested in the first hydrogen-powered private plane company started by a French aeronautics engineer. So I think there's a lot of opportunity, but I think at the end of the day, what we're really looking for is, where are the exits? Are these categories or businesses that have a large acquirer base? And I think within climate tech, there's so much interest and so much need for better products and solutions.
I'm sure a lot of your LPs often are asking, where are the exits? And you think a lot about ultimately where we are in a landscape right now. IPO market, still not looking that pretty. Have you seen an uptick in M&A? Have you seen interest and inbound coming towards you after some of your portfolio companies?
I think the last 12 to 18 months have been incredibly challenging, both in terms of raising growth capital as well as obviously, IPO markets being closed, and M&A for that matter. I actually don't, I think if you look to the remainder of this year, it's going to be challenging. You have an election year coming up, and it's funny, there's a motto in VC right now: survive till 25. I think it's going to be a tough year this year, but I think if you're able to come through, that's the advice that we're giving our founders.
And isn't it amazing that you've called it the Year of Women, and we have just tail end of 2024. We think of the achievements of, ultimately how much economic impact Beyonce and Taylor Swift put together have had on the U.S. economy. You are not only a VC, but ultimately you're a founder yourself, having set up the Female Founders Fund. How are you seeing your role change and what's being asked of you in this particular moment from your own portfolio companies and society at large?
Yeah, no, I think the shift has really been, looking at our portfolio companies and the advice and the way that we kind of work with them. There's definitely been, a shift, I would say, in terms of how do we get from, a more growth at all costs strategy to just running our businesses efficiently. And so that requires a lot of work on the budget. It requires really thinking through team structure and really honing in on what it is that your business needs to survive. And that, I think, for founders as well as VCs is a skill set that we haven't necessarily necessarily had to leverage or use for over a decade.
Anu Dougal, Female Founders Fund, telling us it straight. She is, of course, founding partner at that fund and putting on the Year of Women conference, where she brought together a whole host of female CEOs to have real talk, ultimately, about the environment. But from trying to survive until 2025 to actually thriving, we've got one that is right now. I guess stick with digital health, and one of the companies that Dougal actually mentioned, Ula, is a maternity care clinic that combines midwifery and obstetrics, and it's raised $28 million in Series B funding to expand its technology-enabled and hybrid care approach to more markets beyond here in New York City and launch new services for those in their reproductive years. Here for more, co-founder and CEO Adrienne Nickerson, and who is pretty heavily pregnant right now yourself, so thank you for coming in for it. I am fascinated about raising such money in this current environment as a female founder, as a maternal health company. Was it easier than the seed round, for example, that you first got off the ground during the depths of COVID in 2020?
In some ways, I think they were very similar rounds in the sense that it was a tough environment to be raising. I mean, 2020, April, if you guys remember what you were doing.
We're all in lockdown.
Yeah, probably not going to a lot of brick and mortar businesses. And, you know, that's what we are. Well, we're a hybrid business. And so that was a challenging environment. And we were selling on a story. In some ways, I think what made it easier in this environment is we have data now. We're able to show that this is the solution to a really broken maternal care system, whether that's looking at it from the consumer perspective or from outcomes or for cost. And so even in a tough environment, I think being able to point to a really proven model made it just a little bit easier.
And that proven model being, 1,500 births, fewer C-sections, fewer problematic outcomes, better postnatal care. I'm interested, all of this actually sounds much more like the experience I had birthing in the UK compared to here in the United States. But tell me about the technology that you're building. Why is it necessary to be a tech business?
Well, what's kind of wild about pregnancy care is the sort of status quo looks strikingly similar now to what it did 100 years ago. Which is you have a lot of analog one-on-one visits over 9 months, even though everything about the world has changed and technology has changed. And so we're really trying to sort of modernize that experience and bring technology into the equation. And that's from things like creating a better consumer experience. And so we have a patient portal that extends care outside the four walls. And so you don't just get connection to your team in those 13 visits. You actually can talk to them and get care in all the moments in between, which is where pregnancy really happens. We give the question at 2 a.m. Or when you're struggling postpartum. So the power of tech is really extending beyond the four walls.
I'm interested, and this is a tough question, but given the news out of Alabama, the idea that a Supreme Court is, thinking about, we are in a different landscape when it comes to reproductive rights. We are thinking of rulings that recognize unimplanted human embryos as children. And I know that you give care for miscarriage, for example, and many have sort of said that that's going to have a chilling effect on miscarriage management. How is your business thinking about expanding outside of New York City, and what states you go into and how you're able to address those sorts of political headwinds?
I mean, at the end of the day, we're in a business that is about supporting choice, whether that's the choice for how you want to go through your pregnancy or how you want a midwife and OB involved in care, or whether you want an epidural or nitrous oxide. And so I think we just take that principle and that values to any way in which we think about expanding care and services. And sort of just keep that at the forefront of what we do. And we think women in blue states and red states need great care, and we're going to be driven more by the patient demand and need for a better maternal care experience than sort of what's happening in the broader, maybe political landscape.
Well, we'll be seeing you expand outside of New York. Come tell us where you're going next. It'd be great to have you back on. Ula, co-founder and CEO Adrienne Nickerson. And good luck in the next few weeks as well when it comes to your own family. Meanwhile, returning to Female Founders Fund Year of Women Conference, I got the chance to speak with Thrive Global CEO Arianna Huffington. Just take a listen about her thoughts about how hyper-personalization AI and how that can be used for potential health benefits. Take a listen.
We are are very excited at Thrive about the way we can bring in generative AI into daily behaviors. Because if we look at the data, we see that these 5 daily behaviors of sleep, food, movement, stress, and connection dramatically affect our health and our longevity. So the problem is that changing behaviors is not easy, but with AI and creating what we are building, a co-pilot, a wellness health co-pilot, it's kind of incredible how this personalization can make dramatic changes at how we adopt healthier habits through micro steps. We are big believers, and our scientific advisory board led by BJ Fogg from Stanford is showing all the data that to change behaviors you have to start small. We call them micro steps, too small to fail. Small daily changes that incrementally become healthier habits.
This hyper-personalization, as you reference it in artificial intelligence, is it already a reality, already being deployed? How comfortable or uncomfortable are people with these sort of intimate cues?
Well, that's what is so interesting. People are comfortable giving their own personal data, biometrics, labs, calendar to show where they need the stress breaks, provided they get help back, provided they get value, and provided that they are given to others like employers in an anonymized, aggregated way. And once we guarantee that, then people are willing to share personal data. And knowing personal preferences around sleep, around food, around how you like to exercise is critical so that the nudges and the recommendations are hyper-personalized. The other thing, Caroline, that is really important to remind ourselves of is that the healthcare system right now is broken. It's unsustainable. We are now spending 17% of GDP in healthcare, up from 5% in the 1960s, and the results are worse every year. Chronic diseases are skyrocketing. One stat that I can't get out of my mind is that last year alone we had 150,000 leg amputations, people with diabetes. And the human costs, the healthcare costs are truly unsustainable. So that's why looking at behavior change as the miracle drug is something which we need to take much more seriously.
Later today, a private American-made lunar lander, which was launched with a SpaceX rocket, is about to attempt landing on the moon. Now, the spacecraft was built by Houston-based Initiative Machines, and if successful, this landing would put the U.S. back in business on the moon for the first time since NASA astronauts closed out the Apollo program 50 years ago. It would also become the first private outfit to realize a moon landing. Let's bring in Clayton Swope for his thoughts, his expertise. You're Deputy Director of the Aerospace Security Project at the Center of Strategic and International Studies. You've been tracking this mission closely. It's ahead of schedule. It looks like it's going to be landing softly, we hope, at 4:30 p.m. New York time. Clayton, what does this signal about the way that NASA now does business?
Well, thank you for having me on your show. First off, this is huge news if Intuitive Machines can stick this landing today. This is a big news for commercial space. This is big news for the United States. We haven't been to the surface of the moon since 1972. But this also is big news for NASA because it does validate the approach that they've taken for landing on the moon of using commercial services to do that, which is very different than prior ways that NASA has done space missions.
And what's interesting is it creates opportunities for this particular company who's seen its ultimate market valuation skyrocket on the back of this potential success, but also other startups. What sort of life has it breathed into the ecosystem here in the US?
Yeah, so this one program that NASA has, which I'm thinking looks a lot like FedEx or Uber to the moon, where NASA is saying we have a payload, we have something we want to get to the moon's surface, and we're paying for a company to take it there. There are 14 companies on that contract. They're from all around the country. Intuitive Machines is from Texas. Astrobotic, who attempted the first commercial landing under this program, they're from Pittsburgh, Pennsylvania. So the idea is that you have a lot of innovation, a lot of disruption in how you can do space. And the goal there is to create competition and then ultimately make it cheaper to make it more cost effective to get something from Earth to the moon.
I mean, we understand that the Nova C, it's got 6 payloads from NASA, 5 commercial ones as well, and its contract is roughly about $100 million. It has escalated since when it was first signed on. Just talk us through how difficult it might be to stick this landing, like what failures we've seen relatively recently and what's going to be so important about this particular one.
Yeah, I think we sometimes forget how difficult it is just to get into space. And so if we think about that in the context here, they had to get into space. They had to get from Earth to the moon. They had to orbit the moon. And that last step, landing on the moon, is probably the hardest part. We're having to relearn how to do that since we haven't done it for such a long time. The 3 prior commercial attempts to land on the moon didn't succeed. I think the one way to look at these missions is how maybe the tech sector works and how you can fail fast and learn a lot from those activities. Admittedly, this is my first TV interview. I'm sure I'm going to watch this later and think I could have done something. I could have done something better, but I'll take that for the next one. And I think sometimes you only learn through doing and through trying.
Take us forward, therefore, Clayton. Say they stick the landing, it all works. What do we see evolve from there? What are the next key landmarks that we want, and space marks that we want to see coming from such companies and indeed NASA?
Yeah. One thing to keep in mind, so this is a commercial approach to doing space to getting to the moon, but it's still payrolled or bankrolled by the government. So this is NASA money funding these missions. So it's helping to learn how to get to the moon, using methodologies to get to the moon, investigating new technologies, but still it's government money. So what I think we're really going to want to see is how these foundational capabilities and ways to do business in space, how then those carry over into other economic development in space, and how people learn to find business uses in space that aren't necessarily based on government money. That could be anything from asteroid mining to generating electricity to some kind of manufacturing. So we're on the cusp of that, and these programs are really helping to pave the way so that we know how to do that when that time comes.
Clayton Swope, certainly doesn't feel like it's going to be your only TV. We thank you so much. CSIS, Aerospace Security Project Deputy Director. Well, we wait with bated breath for 4:30 p.m. New York time. Meanwhile, that does it for this edition of Bloomberg Technology. You do not want to forget to check out our podcast. So much to digest. Of course, all things Nvidia, all things the AI ecosystem, and of course, all things as we anticipate not only a key IPO listing coming soon, we understand, from Reddit, and a key launch and perhaps landing on the moon. This is Bloomberg Technology.